You are listening to Keystone Stock Talk Show, episode 192. If this is your first time listening, then thanks for stopping by. This podcast is produced every week for your enjoyment, and show notes are found at www.keystocks.com. Come back often, and feel free to add the podcast to your favorite RSS feed or on iTunes. You can also follow us on Twitter at Keystocks and on Facebook. And keep submitting your stocks via the usual social channels or at our website, keystocks.com, for our Your Stock Our Take segment. And we just might review your stock in an upcoming show and let you know if it is a buy, sell, or hold. Well, we made it through another year and off to our bold predictions for 2023. Bold predictions on AI, gold, the housing market, bull markets, inflation, M&A activity, and Brennan's love life. We've got it all for you packed into this show. We're going to also look at our predictions from 2022, which came true, which we were completely misguided on. Let's get right into that show today. I'm going to welcome my Aaron Dunn and my co-hosts, Brennan and Brett, the Killer Bees. How you guys doing?
Doing well. Happy holidays. Nice to see you guys again.
Happy holidays. Yeah, it was good. Did you guys have a good holiday period?
I sure did. Yep. It was great.
Time of your life, Brennan?
Yeah, it was awesome. Like I was kind of telling you guys before, but my uncle ended up getting a bunch of tape from the 70s of my dad and my uncle and my auntie when they were kids. And I watched about 2 hours of video. There was no sound, but just seeing my dad as a kid.
So 1 hour
cool.
and
how old was
1 hour
he?
and 45 minutes.
I think he was it started out as about 13 to 14 up until he was 19. So it was cool. I got to see him figure skate in Great Falls, Montana. Maybe I'll send
an hour
a clip
and
of that
45 minutes of figure skating.
No. It was
right?
It was my grandma and grandpa, and it was awesome seeing them young and having a great time.
What, they're not young now? Your dad isn't young now?
Well, he is relatively young, I guess I could say. I don't know if he could do the same the double.
Compared to me and Aaron, we think of him as young, right?
I don't know if he could still do the double sow cows and the double toes or whatever he's.
Well, there's only one way to find out. Throw some figure skates back on the ice. Put him out on the ice.
Well,
Make
when he
sure
was
you
50,
film it though.
When he was 50, he tried doing it in our backyard on the rink that he made for me to play hockey, and it didn't end very well.
Your dad made you a custom rink for hockey?
Just like, a little ice pad or a few
that's
ice.
Nice. That's nice.
Yeah.
And you never learned to skate.
I mean, I was a good skater, but, I've got bricks for hands, though. So, I never made it to the show.
That's why you never made it to the NHL.
Yeah.
So close, right? Show. So close.
Yeah.
I'm sure.
Yeah.
Oh, that's cool.
Yep.
Okay. Do you want to start and look back at last year's predictions and how we did, and
apparently I just completely trounced everybody.
Yeah,
I'm sure you did.
Yeah.
Well, let's look at my predictions first. There was the first prediction was SPACs, or the special purpose acquisition companies, will broadly continue to underperform in 2022. We could say this one was correct. SPAC company returns were truly awful in what was a bad year for the markets overall. And some of the SPACs that are still in their original form with no transaction, there's about 80 of them that are looking to just basically have their shareholders looking to have the cash just returned to them, as I understand. So a terrible year for the SPAC sector. So we'll put a check mark in the positive there. Any comments on SPACs? I just like saying SPACs a lot.
Yeah, I mean, SPACs in most cases, I mean, it's a structure. It's not an industry or even a theme, but it was almost seen by investors as a theme. And I think that SPACs, they really overall, they're at the high end of the speculative risk.
Yeah, I think it was a symbol for the excess.
Yeah, and it's just any time you have like a lot of attention and money go into that end of the risk spectrum, it's an indication that the market's probably getting frothy, and typically those are the types of companies that are going to perform the worst when when things reverse and the market performs poorly. That's what we saw.
Yeah. And they were, like I said, kind of a proxy for the excess that we saw in the market over 2022, really after the pandemic. And money was so easy to be raised. And when you can't see, when that kind of gets pulled out, the rug gets pulled out from under you, there'll be far less SPACs, I would say, over the course of this year. That's not one of my predictions. We'll get into those in a sec. But the second prediction was inflation will be huge market focus in 2022. That was the case. I should have stopped there, but I went on and particularly said, in the first half of the year, we have already heard, I said, the Federal Reserve talk of potentially moving faster in terms of rate hikes. It would be difficult to move rates too far, I said, too fast without derailing the economy. So there'll be more talk than actual meaningful rate hikes. Well, inflation has definitely been a huge issue in 2022. There have been actual rate hikes, not just talk. So the general theme was correct, but the rate hikes were understated in my statement there. So I'm giving
I call that a loss in Ryan's.
I'm giving myself at least a half point.
Yeah, I gave him a half point for that.
Thank you.
Yeah.
Quarter point max.
So number 3, you guys got any comments on that? I mean, we're going to talk inflation and everything with our predictions.
No, I mean, I think that. Yeah, it's we can
right.
talk of inflation a little later. So certainly that's been the big talk of the year is inflation. Rate hikes were probably more aggressive than what most people were expecting.
Yeah, historically it was actually,
and yet the economy has not been derailed yet. But it takes 6 to 9 months for rate hikes.
Yeah, there's a lag.
Right?
There's going to be a lag.
Yeah, but historically that was actually one of the most aggressive rate hikes we've ever seen for the rate they rose. So I'll put up a graph which I'll have to find, but compared to recent history, so like post-World War II, this was the most aggressive. Mm-hmm. So Ryan was maybe only a quarter point right there.
Yeah.
So 100%.
I think we can all agree extremely wrong.
Extremely correct. So COVID, number 3 would be COVID will not end in the foreseeable future, but new variants will become less potent or dangerous. And that, coupled with high vaccination rates and advancements, will make it more manageable through 2022. And we will have a semi-normal Christmas this year. So next year, which meant the Christmas we just had. So, I mean, I think on this one, COVID is minimal. Normal Christmas, aside from the 30 feet of snow we had in Vancouver. So, you guys tell me, is that prediction correct?
I'll give you a 0.75.
All right. I'll give me a
you said what was the statement about Christmas?
It'll be semi-normal.
Yeah, it wasn't semi-normal.
It'll be normal. It's normal Christmas.
But
I don't know if it was semi-normal with 30 feet of snow is what I'm saying. So I think I was correct.
You just don't like a white Christmas, do you?
It was an ice Christmas here. It was an ice Christmas. That was the issue, right?
All right, I give Ryan the points on that. We're just talking semantics here.
Number 4, removal of stimulus from world central banks and governments will impede growth, and the markets will face periods of significant volatility in 2022. Correction periods that will lead to value opportunities long term. I think it's correct on a general perspective. So that's about 150% that I batted last year. Mm-hmm. Yes, thank you.
What's the percentage on that there? What did we give them? We gave them
150.
That's 2.5 out of 3. Is that?
It'd be like
3.5.
It depends how much you're arguing for the rate hikes. It's either 3.25 out of 4 or 3.5 out of 4. So whatever you want to call that.
Yeah, I give them the because it was 3 predictions, right? I give you 2 full points.
There was 4. There was 4. There was
4. Sorry.
Yeah.
SPAC. So you got.
So there's also the prediction on Brennan's girlfriend.
Oh, okay. Yep. Go ahead.
Which was that I'd get one, right?
Brennan will state that he has a girlfriend only for it to end up being a figment of his imagination, I think was the prediction, basically. So
I did momentarily have a girlfriend, but
that's why I was getting to 150 points somehow out of 100.
And then you took your pills and she disappeared, right?
Yeah, and then all of a sudden, poof, she was gone.
Did she meet your family?
No.
150.
Did she meet your friends?
Some of them, yep.
Did you introduce her as your girlfriend?
Yes, yep.
Did she
Was she
subsequently
actually-
and immediately dump you after that?
A few days. Just kidding. It wasn't a
Whoa!
few days.
Was
It
she
wasn't a
actually
few days.
breathing at any point?
Yes. Yes.
All right.
I don't know. I give Brennan. I say he did. Yeah. I mean, assuming
Ah.
it wasn't a few days later that she dumped you.
I'd say if Brennan's being honest with himself,
It was a few
his
months later
prediction was
then.
dead on.
Yeah.
Partially on. We will give him a 0.75.
The operative word being dead. I don't think a cadaver counts, but all right, let's
Oh,
just
jeez.
go.
All right. So what do we
Let's-
do? Do we go now into your predictions for this year, and then we?
No,
think
I mean,
we
I think we'll go to yours. We'll review yours.
Okay. Okay. So let's review
Prediction
mine.
one from Aaron: the COVID pandemic will peak in the first quarter of 2022. We will return to some semblance of normalcy by the end of the year. I'd say
So
that's
definitely
correct.
we return to normalcy. I don't know if it peaked in the first quarter though. I think it peaked more in the second quarter, didn't it?
I don't. Did it? I mean, I
It'd be
thought it
close.
was. Wasn't
Yeah.
it the
That's a little bit-
Omicron?
I can't even
just
remember
in the first
now.
3 months. Wasn't Omicron the first 3 months?
Yeah, like
Whatever
that's-
it's called.
Yeah.
I think it might depend on the
I
exact
think it's
region
right.
too. So
Okay.
Yeah.
Well, give me a
Yes,
point.
it's- it's
I,
fine enough.
I can't remember exactly if it was the
Mhm.
first, the second quarter, but generous. I'll take it. Yeah. So that
Num-
gives me a full point.
Number two, cost push inflation will continue to be a major factor in the economy through 2022.
Yeah. I mean, it did. I mean, I think that.
What about
That's-
cost pull inflation? I'm just, let's
I
just,
think
this
that-
just doesn't. You got push there. It's good.
Yeah. So when you're talking cost push inflation, that means higher costs make it more expensive for companies to operate, produce products. They have to pass those prices on to consumers. So you're thinking like energy, higher cost of energy makes it more expensive to produce and to transport items. There's also labor costs. I think you'd add labor costs in that, increasing the cost of products and services. So definitely that has been the case throughout the year.
Yeah, and I can give some examples. Like companies that were able to implement pricing increases actually experienced quite a good 2023. Like Hammond Power, for example, which was able to do 4 price increases the year before, so get ahead of it, and a couple over the course of this year had an absolute blowout year, and the stock was up, over 100% on the year. On the flip side, there was a number of companies that in the automotive sector, for example, when you have longer sales cycles, it's harder to begin to, you have a contract in place. You can't just immediately typically pass on that. Like a company like Exco Technologies, which is expected to likely have better earnings this year, wasn't able to pass those inflation costs on to its customers essentially because they have longer term contracts in place that they're operating under for multiple quarters. So you could see those start to come in place over the course of this year. There's also many challenges in the automotive sector overall, but it's a tale of companies that were able to pass it on, that were able not to pass it on. And something we'll be watching this year is how sticky those price increases can be. Will customers now be asking for a pullback? Will you continue to stay at those prices going forward? It is a unique environment. You got to continue to monitor all of these things when you're looking at companies.
Certainly. Just to kind of clarify, Ron had mentioned as a joke, cost pull inflation. There is also another type of inflation referred to as demand pull inflation. So what that means is just the demand for products is so high that it results in price increases. And this is what we saw during the pandemic when people were shut in. There are certain products and services where the demand just accelerated, and that began to increase prices. But then that shifted more to a cost push inflation. So
yeah, there was definitely. There was items that were, hoarded too, right? That went up in price, but yeah.
And many of them are in Ryan's basement and
Basement,
storage shed
yeah.
right now.
Yeah, it's true. I have lots of.
He
toilet
still
paper.
has about
Although
a
we
ton
use
of
a
toilet
surprising
paper and
amount
paper
of
towels
toilet
and
paper.
Kleenex in there. Yeah.
Gotta get a
Brennan's
bidet.
been using a lot of Kleenex this year because of his dating life. But that's another story. All right, let's get on to Brennan's debate. Loss. This is Aaron's prediction. Brennan's debate loss. Right will decline to below 75% in 2022.
I think
So
he was
his
correct.
debate loss rate will decline.
Yeah. And
to
his
below
loss
70%.
rate was 50%. which means his win rate was also 50%.
That's how it works.
Which is a huge improvement from the year before, where I think he lost every battle.
Or the years before.
Yeah, the years before, I'd say.
Well,
I attribute the success to my own mentorship of Brennan over that period of time.
Thank you. Yes, thank you
double
for
win.
the knowledge.
Or of some kind of random act of kindness that allowed him to win something. Yeah. So I think that was your 3 predictions, right?
That was it, yeah.
All right.
3.
So 0 for 3. That's okay. You'll get them next year.
I think that's 100%? You want to do the math there, Brett?
Well, you got 100. I got 150. We're good.
I thought you got closer to 50 than 150.
Yeah.
Can
Brennan's predictions.
Can I just rifle through mine here? And go
sure.
through
You want to rifle?
Yeah. So I think that I was correct on about 2.5 out of 6. So my
Take
first
over the
one.
show, Brennan. By all means.
Thank you. Thanks, Ryan. So my first one, I said that I believe that gold will perform well in 2022 because of its safe haven properties. So I think that this is correct. Now, Brett and I had a bit of a debate on whether I was right here, but I would like to argue that technically I was right, because if we look at gold's performance in comparison to the S&P 500 and the TSX, which are down 21% and 9% respectively, while gold is down only about 0.5%, relatively speaking, I believe that gold has performed well in 2022. So
I don't know. Those 1 year T-bills get better.
I guess we should probably define well. Like, well, what was the performance of gold?
0. It was effectively flat year over year.
Flat. Nah, you can't say it performed well. I give you a half point for that max. Like, it's not even a positive. Even if it went up like 5%, right? Like, how did it perform relative to energy?
Well, it is cherry picking an asset, but we would have had. I think we need to define what was well.
And that's
we
the
went
thing.
well in relative terms, but if you just mean perform well, it probably just
give him the point. Then he
No.
It doesn't matter anyways.
Let's see.
Anyways.
Oh, now it doesn't matter.
It does. I mean,
let's see how wrong he is. Let's see how wrong he is in other areas, and then maybe we'll be charity.
This one's funny. This one's funny.
Well,
yeah,
we'll compromise. We'll give you points.
The next one hurts. Don't worry.
Yeah.
Okay. Here's my answer question to you on that. When you made the prediction, were you thinking in absolute or relative terms?
Absolute. I will say.
I don't remember.
Absolute.
He says.
I really don't remember, but it was probably absolute. But like this year, when you look at my predictions, I'm much more specific? I really define. Yeah, I'm specific with what I mean.
That's not good protocol.
That's probably
being a forecaster.
Yeah, I know.
You want to be as vague as possible.
It's okay.
Yeah.
Anyways,
what I actually meant.
Okay, let's let Brennan.
So my next one is small cap stocks will perform better in 2022 than they did in 2021. Well, I was wrong. The Russell was down 23%. So the next one that I had,
he's just moving on from that one.
Well, it's because I was wrong.
It's
as simple as that. Now, number 3, I said that this one was a flyer, but I said that Rio Tinto would announce a new discovery and plan to advance a diamond mine in Saskatchewan during 2022.
See, that's very specific.
This is very specific. This was so wrong. Essentially, Rio Tinto placed the project on care and maintenance and also advised that it intended to conduct a near-term review of its alternatives regarding the project, including its potential exit. So I just want to say here, this is a cautionary tale of investing in junior exploration companies and is why Keystone chooses to avoid these speculative stocks. I have followed this Saskatchewan diamond project.
Told Brandon not to buy the company.
Yes.
Well, I was just going to say, I followed this Sask diamond project since I was a teenager, and it was the first stock that I've ever purchased.
Since last year.
No, since I was, maybe 14 or 15.
Also the last, because Brendan put 100% of his portfolio in it.
But in hindsight, I wish that I would have been holding, a cash flow producing business over all of those years rather than.
So how did that company
capital.
perform?
Down 60%. Star Diamond Corp.
Yeah.
Yep.
Honestly, I would have expected it to be even more. I thought you were going to say like 95% or something.
No.
Are you still with it? Do you still believe in the story?
I sold a lot of it, and I am now transferring most of that capital into
my new widget
into
business?
Keystone's recommendations. We've got a few here that I'm definitely going to be buying in the new year when I can move that capital from the TFSA into my other TFSA. So yeah.
Good.
Now, I was wrong there. My next one, the semiconductor chip shortage will continue to be an issue throughout 2022 and even potentially into 2023. I think I get a half point here. I think the chip shortages turned into kind of a surplus in some industries mid-year. And like even, by late June 2022, Micron came out and said that it would reduce production, which even caught them by surprise. So I think,
very weak results from Micron in the last quarter. Really weak. Yeah.
And then this one kind of goes with what you guys were saying, the COVID. I was going to double down on my prediction from 2021 and say that the pandemic's end will be in sight by December of 2022. I think this is correct. And my last one, that I said that I was going to win the basketball draft that I was in, taking home the glory and $450 in cash. I was wrong. I went undefeated all year, but lost first round of playoffs. Yep. So
when the pressure hit, you folded like a cheap suit.
Yeah,
in basketball.
Exactly.
Yeah.
Sounds like somebody else Ryan used to follow.
Yeah, I know.
Anyways, we won't go with
I
that.
know who you're talking about.
So 2 for 6, maybe. I don't know. If I give myself a half point on the gold one, 2 for 6.
Yeah, I'll give you half on that. I'll give you 0.75 on it.
Oh, thank you.
Yeah. So what a good predictor would say I made 2 correct predictions last year and then not mention the other ones. That's what you should just do. 2 great predictions.
So half his correct predictions were the same as your guys's.
Relative to most forecasters, Brennan's performance was actually incredibly strong.
Stellar.
To be honest,
thank you.
They just don't talk about their losses.
It's true.
Yeah.
All right. Well, I'm glad we went through those. We saw how we did last year. We're going to get into our predictions. But before that, I've got a little piece to share about predictions generally. Like, Aaron was kind of foreshadowing this right now. I'm decided to start our prediction show or our forecasting special show with a piece on why forecasting is absolute folly. Undoubtedly submarining the entire episode, but from my perspective, the following needs to be heard by serious investors. I will start with a few quotes. Okay, the first quote here is there are 2 kinds of forecasters: those who don't know and those who don't know they don't know. And that is from John Kenneth Galbraith. Macro forecasts, again, the second not prediction here, but quote is forecasts create the mirage that the future is knowable. That is from financial historian Peter L. Bernstein. And I think this is my favorite. We'll build off this in a moment. But investors rely on historic references and the forecasts they foster because they would fear that without them, they would be flying blind. But that does not make them reliable. And that's from Howard Marks. For me, investors would be most often more comforted with the advice from an idiot than the cold truth from an intelligent investor that the macro future is indeed very, very difficult to predict. Now, just for a start, if you don't know who Howard Marks is, he is the co-founder and co-chairman of Oaktree Capital Management, the largest investor in distressed securities worldwide. He holds a net worth right now of $2.2 billion. Now, his last point is the crux of the argument. Just because investors rely on forecasts, that does not make them reliable. And reliability is key. If they are not reliable, they are useless and in many cases harmful to your portfolio. So let's continue on this folly of macro forecasting. Now, when considering the reasonableness of forecasts, Marx believes we should decide whether our world is one of order or one of randomness. In a recent memo, he states that, and I will paraphrase him here, is the world entirely predictable, entirely unpredictable, or somewhere in between? For me and him, it is likely in between, but unpredictable enough to make most forecasts unhelpful. Since our world is predictable at some times and unpredictable at other times, what good are forecasts and investments based on them if we cannot tell which is which? Now, let's continue on this. I like to use examples, so does Marx, and this is one from him. Example number 1 would be in the fall of 2016, there were 2 massive consensus macro forecasts. Number 1, Hillary Clinton would win the US election, and if somehow she lost, number 2, and Trump was elected, the markets would tank. So what actually happened? Well, of course, Trump won and the market soared. Basing your investment decisions on these macro forecasts would have cost you money. Now, Mark's conclusion on macro forecasting essentially is, and I agree wholeheartedly with this. At first, this might sound counter to the argument that we're making here, but it will make sense in the end, so give it some time. Number one, most forecasts consist of extrapolation of past performance. Because macro developments usually don't diverge from prior trends, extrapolation is usually successful. Thus, most forecasts are correct. But wait, I said that forecasts are folly. Here's where it will all come together. Now, but since extrapolation is usually anticipated by security or stock prices, those who follow expectations based on extrapolation don't usually enjoy profits when it holds. Now, once in a while, the behavior of the economy does deviate material from past patterns. Since this deviation comes as a surprise to most investors, its occurrence moves markets, meaning an accurate prediction of the deviation would be highly profitable. However, since the economy does not diverge from the past performance very often, correct forecasts of deviations are rarely made, and forecasts of deviations turn out to be incorrect. Thus, we have two scenarios. Extrapolation forecasts would be number one, most of which are correct but unprofitable. Number two would be potential profitable forecasts of deviation, which are rarely correct and thus generally unprofitable. The conclusion here is most forecasts don't add to returns, though they can be very entertaining. And that's what we're trying to do here today. While one should not ignore the macro environment, it is folly to try to base your investment decisions on macro forecasts, which require far too many inputs for even the best forecasters to consistently get right. Finally, I'm going to give a final example here. Example number two, I think this hits home for where we are in the current markets. In the S&P 500 had fallen by March 9th, 2009. The macro forecasts at this time were terrible. At that time, the S&P 500 had fallen 57% since the bear crash began in 2007, and pessimism reigned supreme. But what happened on that day? The stock market turned around and suddenly embarked on the longest bull run in history. By 2013, the S&P 500 had gained back all the losses of the Great Recession. If you listen to macro forecasts, you would have been nowhere near the stock market at some of the best times to invest in decades. Now, we'll look here again at the folly of macro forecasting. To me, the stock market is an early warning indicator. It starts declining, and it started declining in this case in mid-November 2021, long before the recession hit. On the flip side, the markets typically bottom long before it ends. What you should do is find stocks you want to buy today and start buying with a long-term plan. The problem is most people buy stocks the wrong way, curiously behaving differently to price increases or decreases than if they were purchasing almost anything else. For example, if steak were 30% off at the supermarket, you'd buy it. Stocks drop 30% in price and many panic and sell. The opposite is also true. The price of steak jumps 30%. You substitute, you buy chicken or just buy less steak. But in the stock market, stocks go up in price 30%. Many buy for fear of missing out. Historically, we know these are terrible strategies. When great cash producing stocks come on sale, it is a great time to buy. So what can you do? Focus on what you can control. Number one, you can control the composition of your portfolio. Essentially, how many stocks to own and over what period of time to build it. Number two, you can control what you put in your portfolio. And this is the most important part. The types of stocks you want to own. Great cash producing businesses that trade at reasonable valuations with growth paths ahead of them. Dividend growth and just growth stocks. That's what we recommend in our client portfolios. We'll continue to do that in 2023. Now we're going to go on to making a bunch of useless predictions.
We are.
After saying that, of course, we're going to make some great predictions here. Who wants to start?
I'll start.
Oh, me? Okay,
I'll
sure.
We're all
go
jumping
here.
at the gun.
Aaron's going to start.
Okay, so my predictions are related to a forecast that I made actually about a month ago on the podcast. So essentially, we were looking at inflation rates, and I'd made an inflation forecast for 2023 about 6 weeks ago or so. And what I'm going to do is I'm going to reiterate that forecast here. So prediction number 1 is inflation continues to decline through the first half of 2023. Now, when people look at the inflation number, typically what is put up front and center is the year-over-year inflation figure, which is still stubbornly high at 6.8% year over year, well above the 2% target that the Bank of Canada sets. And I believe the Fed sets the same target in the US. But really what's more important in terms of trying to analyze the trend of inflation or where it's going to be in 6 months from now is to look at the month-over-month figures. So inflation in Canada peaked in June at about 8.1%. Since then, in the late summer, in the early fall, it's come down, now down about 6.8%. Now, I had made a prediction, given that the month-over-month figures had declined significantly, basically starting in July, that we would hit, the 2% target, to get close to the 2% in target inflation rate around May of next year, around May of 2023. Now, my prediction was somewhat derailed because I was assuming 0.1% on average monthly inflation, basically extrapolated out to May of next year. Now, this prediction was made when we only had the September number. Then the October number came out. That kind of blew me out of the water because there was surprisingly high inflation, 0.7% for the month. Most of that was gasoline, though, was gas. But then we go into November. We have the November figures right now, and it dropped back down to the 0.1 per month. So I'm going to keep this. I'm going to extrapolate this out, update the numbers. And what we see from a graph, if we extrapolate the 0.1% on average monthly inflation rate, is that we're going to get actually higher inflation in January, about 7%. But then it's going to start dropping pretty quickly. And we're going to get down to about the 2% inflation rate in May of next year. And one of the things that's going to be driving this is that inflation really started to ramp up in January of 2022. And then it stayed strong until about June. So the year-over-year numbers that we're getting right now, that 6.8% inflation, you're now comparing us to what was lower inflation rate in 2021. But once we get into 2023, we're going to be comparing the monthly figures to those elevated rates that we got in 2022. So once again, now, is this a good forecast? No, it's a horrible forecast, just, extrapolating the 0.1% out. But I just wanted to do it to kind of show people how things can trend if inflation numbers, stay at this level. And it does seem that things are slowing down. There's, some of the heat is being taken out of the labor market. The real estate market's come down, commodity prices, energy prices have more or less stabilized. So there are good arguments to make that at some point in 2023, we're going to get back down to an area that's more normalized. But again, this is a horrible forecast. Don't rely on it in any way, shape, or form. So prediction number 2, and this is linked with the inflation, is that central bankers will begin to announce interest rate reductions in 2023. I'm guessing around the second half. We get through the first half. A lot of those rate increases that have already happened are going to start taking their toll on the economy. The central bankers are going to see signs that the economy is slowing down. I think we probably will go into a recession in 2023, but really that doesn't really tell you much. It could be a deep and long recession. It could be a short and shallow recession. So, but I think that once there's signs that these aggressive interest rate hikes have started to work and they've started to slow down the economy, we're going to very quickly after that see them slowly bring rates down. So I'm looking second half of 2023, at least one interest rate decrease from central bankers in Canada and the US. I'm guessing in the US, it's going to come a little bit later than in Canada. And then prediction number 3 is that stock markets will enter another bull market in 2023. And I'm guessing this is going to start somewhere in the first half of the year, or it's going to be clear in the first half of the year. And this, again, this is linked to the inflation. This is linked to my forecast about interest rates. I don't think that the markets are going to start to recover once it's clear that we're out of the woods with the high inflation. I think the markets are going to, even if we go into recession, at some point in 2023, I think that the markets are going to be looking at least 2 to 3 or 4 quarters forward. Once there's a light at the end of the tunnel, once it seems to be clear that we have inflation under control, and that there's the prospect of interest rates starting to go down again, and central bankers starting to stimulate the economy again, I think the market is going to react well in advance of that, just in anticipation. So I'm looking for a bull market in 2023, sometime to begin in the first half of the year. Once again, these are horrible forecasts. Don't rely on them in any way, shape, or form. It's just for fun. It's just for information. It really doesn't affect our investment thesis either way, which is just to focus on great companies that you want to own, not for a couple of quarters, but for 5-10 years and beyond. And that does my predictions for 2023.
Excellent. It's going to be really difficult to confirm whether number 3 actually is, by the end of the year, a bull market, because, it could start in, we could have 10% up from May, for example. But if the start of 2024 goes 10% down over the first, it'll be hard to quantify that as a bull market.
I disagree. I think it will be easy to quantify it.
You
just have to look at a price trend.
Impossible.
Like if at some point,
literally impossible.
If at some point markets start trending upwards in the first half of the year,
but can we call
the trend remains more or less in? Well, I guess we could discuss the definition of a bull market, but if that trend is more or less intact by the end of the year, it's not going to be in a straight line. Obviously, there's going to be peaks and troughs along the way. But if you start to see a trend, at the beginning, sometime in the first half, that continues to the end of the year, I'd call that a bull market. Ryan's already setting it up to argue, it's a half point, it's 3/4 point. No.
Of course I am. Of course. Oh, it's perfect. Okay, well, I can start with another one. I'll start with one, then you guys can comment on it. There'll be some comments there, and then one of you other clowns can do a prediction after this. Okay, so I'm gonna say my first prediction: AI, or artificial intelligence, will be one of the most discussed themes in 2023. The next and best investment ideas are coming here, but investors beware of the pretenders in this segment. So AI, or artificial intelligence, will be one of the more discussed themes as more use cases are imagined and essentially flushed out and realized. AI has been brought into focus by chatbots, essentially ChatGPT, showing off thousands of AI uses, including text, image, audio and video, digital media generation and analysis, and more, and will create many investment opportunities, some real, but as I also predict, this will develop into another area that TSX venture charlatans will seize to raise capital over the next several years in ill-conceived shell companies that investors should avoid with extreme prejudice. True AI applications continue to be capital intensive and are big data reliant, which is very expensive. The average TSX venture company raising, say, tens to even hundreds of millions of dollars is unlikely to be a long-term winner, particularly if they are starting today or trying to acquire tech and rolling it up into a public shell. Some buzzwords we have seen lead to these type of bubbles, raising capital cycles in the past, and then crashes over the past decade include 3D printing stocks, cannabis stocks, the never-ending boom and bust of junior mining stocks, crypto stocks, and so much more. So could it happen again for AI stocks in 2023 and beyond? I think it could.
Yeah, I agree with that 100%. Whenever there's huge legitimacy in a lot of the hype, but whenever there's legitimate hype in a space, it always gets overblown. People always start to overestimate, and that's when all the promoters, the speculative, sketchy companies start to get involved in that area. And then it becomes, for most people, it becomes very difficult to separate the true opportunities from the scams, right? So the way that we would separate it is just by looking at the fundamentals of the business. I mean, if it's a company with just an idea, but nothing to back it up in terms of revenue or profit, then it's going to be very difficult for an investor to determine, like, is this technology legitimate? How does it compare to other competitive products out there? But if a company is actually producing revenue from their and ideally profitability as well from this technology, then that's a good indication that the experts in that field, likely the businesses that they're selling the technology to, accept it and are willing to take money out of their pocket. So that is the best way for somebody who doesn't understand the technology completely to assess whether or not a company is legitimate or not. If there's no revenue, just assume that it's not legitimate until revenue comes. They should be able to produce revenue if they have a great technology. It's possible you will miss a couple of opportunities, but you will also miss a lot of major speculations and scams. And there are great opportunities out there that are producing revenue and producing cash flow. So we have some ideas in the space, best ways to invest in things like ChatGPT or this coming AI transformation. And it doesn't involve just looking at highly speculative companies. Anybody who's interested, they can reach out to us as well about some of those names.
So how do we quantify if you're right or wrong on this one?
Well, we see if the theme of the year, if everybody's talking about
fair enough
AI.
If there's a lot of headlines.
If nobody's talking about AI, if there's no companies that are listed as AI related companies, if you don't see a bunch of buzzwords, I'm not going to guarantee on a prediction, but I'm sure by midway, our seed, our sweep through this year, there's going to be a lot of TSX venture companies that say, XYZ mining that used to be XYZ mining is now AI.
I've already seen a lot.
Yeah. Company. Yeah.
So we're going off how many companies change their name to something to do with AI. Is that our metric?
Exactly.
Okay.
I mean, even on our chat sessions, clients have been asking
metric
about ChatGPT and whatnot. So, we are already seeing it, start to take place where it is in the forefront, I guess. Yes.
Yeah. ChatGPT is a natural language processing software, essentially programmed to engage like text-based conversation with people in a natural human-like manner. It's owned by OpenAI, is it not?
Correct.
Yeah. Yes.
Great. So who wants to make the next bold prediction? Raise your hand.
I can.
Brennan. Okay.
Yeah. I just want to focus on a couple of these charts right over here. So my first prediction is that airfare pricing is going to become more reasonable in 2023. So over the last 12 months, airfare in the US had an inflation rate of about 36%, as you can see here on this graph. And essentially, I believe that airfare pricing will begin to normalize in 2023 back to its pre-pandemic levels. Now, of course, fuel is one of the largest input costs for air travel, which has been coming down from highs. But I believe that following the post-COVID spike in demand for air travel experienced in 2022, airlines will begin to adapt to capacity issues, which began with airlines laying off a substantial amount of staff in 2022. For example, WestJet just released their new strategy earlier this week and said that they're going to take the Calgary-based airline back to its roots in a world emerging from 2 years of pandemic restrictions and lockdowns, which means the CEO said more centralization in Western Canada while looking for ways to make flying more affordable. Now, whether this new CEO will be able to actually change this and make flying more affordable is a question, but it is a push for progress. Now, as well, if you guys have been looking at the news recently, Southwest Airlines in the U.S. is going through its own problems, recently causing it to cancel more than 2,300 flights in a day over the holidays due to winter storms, but most importantly, because of staffing shortages and underinvestment in its operations, such as its technology, which matches crew members with an aircraft, where they actually had to do this manually by hand. So I really think that airlines are waking up to their shortcomings and are working to fix their issues. And this has been pushed to the forefront, with a lot of these headlines and traveling being an absolute nightmare. And to track my prediction, since I'm trying to be specific this year, I will use the St. Louis Fed Consumer Price Index for the average airline fares in U.S. cities, which is this graph right here. So in November, which is the most recent data that we have, the index was at 280.5. So by December of 2023, I believe the index will be lower than this spot. So yeah, that is
That
my
is
first.
a specific prediction. Thank you.
It is a
for that.
specific prediction, and we'll
How can
see.
we profit from that?
It's a good question.
I'm
Yeah, it is a
just
good question.
No, I have noticed a number of new airlines flying out of YVR, out of Vancouver, JetBlue, Canada Airlines. So I've seen a few coming up. Porter, I think, is coming out of YVR now. So competition may also lead to lower prices, we would hope.
Well, thanks for backing me up.
So, Brett, you want to launch into a prediction?
Yeah, I'll go into a couple of mine quite quick. I had some similar ones there, and we didn't plan these before the show to see if we had the same or different. So I had a similar prediction on inflation that'll be materially lower by the end of the year, but I specifically put the number around 3%. I would say I lean towards the lower side, so between 2 and 3.5% is quite a decent range, but around 3% I would say by the end of the year. So you can roast me over once we're at 7% inflation again next year. And then the other one,
both.
Well, of course, I've been working under him too much. We've both been working on our Canadian dividend all-star report for next year, and I think I've been taking too many notes from him that's the problem.
That's a good.
And then my other similar prediction with him, I know, great segue to that, is the major Canadian and American index will finish up. So I'm going by the end of the year. He said halfway through the year bull market. I differ. End of the year, it will be overall up. And I'll even add on to that. I will take Brendan's prediction from last year. Small caps will do better. So small caps will outperform the broader market. So we'll see the Russell 2000, and I'll compare it to, let's say, the S&P 500 will outperform. Yeah. Nice. So yeah, two similar predictions, but we didn't plan on these before the show. I'm just thinking too much like Aaron these days, apparently.
Well, I think that Brett has some spyware on my computer. That's my.
Oh, well, that's what I do.
Mm-hmm.
Yeah, it's true.
He is a tech guru.
No, I mean, I think that it's really tough to pinpoint, where it's going to go, but there are some good signs at least, and I'm optimistic that it is trending in the right direction, and it should continue to do that as we get into next year. As now we're going to be comparing it against those elevated figures that began to be higher in the first half of 2022.
Okay, excellent. I'll make a prediction here. Housing prices continue to fall, a significant decline in North American housing prices in 2023. So housing it started to roll over near the end of 2022 in terms of pricing, has actually held up well for the year relative to other asset classes. The S&P CoreLogic Case-Shiller 20-City Composite Home Price Index, that's a mouthful, is still up 6.46% in 2022, where stocks, crypto, for example, a number of other commodities have collapsed from their highs on the year. The rate hikes in 2022, which were late and very aggressive, have a lagging effect as monthly payments reset over the course of 2023. Demand for homes lessens, and the reality will set in for those on the margins, forcing some sales at some point. I'm not saying it's going to get crazy or anything, but some kind of significant decline, and we can measure it by looking at that S&P CoreLogic Case-Shiller 20-City Composite Index, likely in the range, beyond 10%. Sorry, is what I'd be looking
for. Okay, can I follow you up there?
You specified you think that housing prices will be down across North America, will be down at least 10%.
Well, no, that index.
That index. Okay. 10% though is the figure that you're. So that's a very specific.
That's a significant,
quantifiable. Oh yeah, no, yeah. I just wanted to quantify, but that's a very quantifiable prediction.
Mm-hmm.
Planting the seeds.
You can tell Ryan's not a forecaster because when you're specific, that's a compliment.
I didn't say exactly 10%. I said
10% or greater. Yeah.
If it's 9.8, I can still get 0.75 points. So.
I would give you, if it's anything over 9.5, I would give you 100%.
Look at that. Yeah. That's very generous.
I'm very generous.
I thank you.
Well,
it's the Christmas season, right?
So, yeah.
Yeah, we're going to tape that, play it back, because it's going to be 9.49 or something.
Well, then you get 0%. So.
Yeah, that's true. So we'll see how that goes over the course of this year. Maybe it'll get more affordable for Brennan. That's what we're all
and that's a nice segue into one of mine. So my second prediction here is because of elevated interest rates, I believe single family residential housing prices in Saskatoon will decline about 6% to a median price of $380,000. And to track this, I will
Did
be.
you say 6%? Like you're exactly. What if it's 7? You're
Well,
wrong
sorry,
there?
I do have like a little squiggly approximate sign.
just
So approximately 6% to a
But if
median
it goes
price.
down 10, are you wrong?
Yes, I'm wrong. Let's go like plus or minus, 1%. Okay, let's do that. So
Give you 2%.
or thanks, 2%. So to track this, I will be using the Saskatchewan Realtors Association Home Price Index, which is currently
That
priced.
exists?
It does exist in Saskatoon too. So the most recent median price, and this was from November data, is $403,000 for a home in Saskatoon. I believe that it's going to come down to about $380 by the end of the year, but we'll see. And
Your dreams don't count,
Good
for the record.
Thank you. And
All
yeah, I
right.
mean, Saskatoon's a less volatile market, than a lot of the rest of Canada because, not many people want to live here. But
Or because there's 17 houses.
well, and it also snowed like,
I'm
2
just
feet
kidding.
in the last, couple of weeks.
It
here,
almost
so
did here too. So
That's true. That
it's
is
crazy.
true.
Yeah.
Do you guys have any more? I've got.
Yeah.
Okay.
I've got one right here.
Yep.
Now this one's very specific and will be quantifiable. So it's a dicey prediction. Then more companies from our 2023 cash rich profitable stock special report and just general small cap coverage generally will be acquired than in the previous year. Smart money will start buying with the declines. Aggregate M&A will be down as less transactions are completed in down markets, but the smart money will be buying. I'll give you an idea. Last year, every year we do this, we're completing work on it right now, looking at all TSX listed and TSX Venture listed companies, pulling out cash rich, small to mid cap companies with have net cash positions and are profitable. So we do a report on this annually, been doing it for about a decade. Last year, approximately 90 companies were pulled out, 4 were acquired, and 2 more had their assets purchased for essentially for cash out of the business. Now, the 4 that were acquired were Freshii, a company that we outlined in a number of reports as a potential takeover target. So there's a prediction that went well. Freshii is a food provider, essentially quick service restaurant. The other company, 3 companies, Goldspot, Discoveries Corp, Macro Enterprises, which is a company that was recommended and owned by Keystone Clients, management-led transaction here. We expect more of these type of management-led transactions in 2023. And finally, Vigil Health Solutions. There was, again, like I said, a couple of publicly listed companies had their primary public businesses acquired. They are still trading publicly, but with just the cash on hand, seeking other business opportunities. One of them was StarX International, which we actually talked about in a recent podcast. The other one was Noble Iron Inc. All of these were acquired for significant premiums, so there are opportunities here. I note that there was these going private transactions. I believe those will uptick in 2023. There was just one completed in the small cap segment on December 9th, a going private management buyout of a small cap insurer. The company was called ICPEI Holdings, symbol ICPH. It was bought for cash considerations of $4. That was a 90% premium to its closing price of $2.10 the day prior. Significant opportunities in this regard may present themselves in 2023, but one will have to position themselves ahead of time in good businesses, and that is what we are looking for in our small cap report that will be cash rich small cap report that will be out this month.
I think I could add another one too that ended up getting takeover. Apollo Health. That was another company that ended up getting taken out.
Apollo Health, yeah.
Primarily, I think it was just for its cash balance that was getting taken out. But, that was a company that we were intrigued by. I know that Ryan wrote a huge report on it. We were about to recommend it, but we didn't, and there was a good reason why. And they ended up getting acquired at, substantially lower than what they were trading at when we wrote the report. But anyways, that was another business in there.
Thanks for pointing that out.
Yeah.
Now, was that in? I was wondering, was that in 2020?
It was at the very beginning. I believe it was January of 2022.
Yeah, I think that we didn't put them into that report. That's why they.
Yes. No, I think. Good point. I'd have to look at the report again.
Excellent. Now, okay, let's see. Do you have any other predictions?
I've just got one more. I've just got, one more real one, actually. This year, I'm saying that gold will perform well in 2023, relative to other asset classes. This year I'll actually, have a relative performance in relation to the TSX and S&P 500. So I think that it will perform well due to its safe haven properties.
And well means that it will have a higher relative performance, not equal.
Correct.
Yeah. I don't think really that gold has performed well, say, over the last 5 years. Has it?
Decades.
I'll have to take another look.
Over the last 5.
We've visited it several times. Yeah, I mean, don't quote me on the time horizon. We visited it several times, like through the pandemic, through inflationary periods. And given the fact that it's supposed to be, an inflation hedge, it's supposed to be, an asset that you go to in uncertain times. It always seemed to produce dismal performance to me. But I haven't checked in for several months.
So Aaron's next new prediction, Brennan's gold prediction, will be wrong.
Yes. Yeah.
That's also, I would agree with that too. I think I was pushing back on that before yesterday.
You were. Sure. Yeah. Guaranteed.
Mm-hmm.
So I won't hold anybody to these predictions, but what are you guys' thoughts on, will Bitcoin specifically, not crypto, but Bitcoin be higher or lower at the end of next year?
I think that it will continue to be lower. Everyone's talking about the crypto winter right now. I just think that sentiment in the space is everything, since you can't value it. How do you value it? I'm sure there's some people that are yelling at their screen at me right now saying you can value it. Well, I don't think you can, but sentiment is the key performance indicator, I guess you could say, for Bitcoin. And I think that sentiment in the space is horrible. So I would argue down from where it is right now.
I'll take the opposite stance. I'm going to say it's going to go up. We're going to
contrarian
go to the moon. No, but seriously, I do believe it will tend to actually go up. We might see it go lower, but if we're going to go off the macro forecasting, one of the common metrics which you'll see all the time online is approaching the halvening. So how Bitcoin functions is roughly every 4 years, it will cut its reward. So pretty much think of a miner saying they get 1 ton of gold, every 4 years it will go to half a ton, a quarter of a ton, and so on. That's the basic function of Bitcoin, of how it works. There's a lot more complexity to it, but that's the basic of it. And normally when it leads up to that halvening is what it's called, is the price will start to go up. And the next one is in 2024. It's in May, I believe, roughly. It does fluctuate by about a few weeks. It's sometime in the second quarter of 2024. So by the end of 2023, which is what we're looking at, I think it will go up. And as well on Brennan's sentiment take, if the sentiment is an all-time low, where can it go but up?
No, it's a good point. That's why I said
that FTX isn't paying its promoters anymore, right? Right?
Oh no! I'm looking for
Bankman-Fried is going to jail apparently.
I'm going with WonderFi. Kevin O'Leary's no connection to FTX there.
Right. Okay.
Yeah.
Okay. Just want to make sure you get paid for your plug there.
Yeah.
And just for reference,
no. So Aaron, what's yours?
I think that it's gonna go down during the year, but I think it's gonna end up within 10% of the current price, plus or minus. So
I think we're at about 16,500 right now. So he's saying like 16 to what? 15.5. Yeah, US.
I think it'll end up anywhere between like 2,000 and like 200,000, somewhere in that range.
So you're not.
I'm gonna say like roughly flat. I'm gonna say roughly flat, and flat measured within 10.
I'd argue even higher for Bitcoin flat, because you'll see 10% trades in a week commonly.
Sure,
so even higher, like 15 to 20K. 15 to 20K, I would say it'd be flat.
Okay.
prefer
15 to
yearly
20K,
time. Yeah, I think that'd be reasonable to call flat for Bitcoin.
What do you think, Ryan?
So you guys aren't exactly at Kathy Woods'
I was just
$1
gonna bring
million
that up.
per coin by 2023. You're not there.
No,
Or
it was like
2030,
2025.
2030.
Yeah, 2030
Although
was it?
any predictions to 2023 should just be absolutely thrown out.
Did
the
she
window
actually say
anyways,
that?
Yeah, she
Oh, yeah.
says
I
Bitcoin.
think it was 2025 initially. Was then
Oh
she
yeah,
moved
but
it
now
back.
it's
That's- yeah.
that's
20
nice. That you get to
2023.
move
She
it.
thinks $1 million a coin in 2023.
2030.
No, 2030. 2030.
2030. Okay.
But
Yeah, sorry,
still,
sorry,
I mean,
2030.
look at the game.
No,
that
but
has
still,
to
we
be.
got I mean,
Yeah,
the
any
problem is like
prediction
7
to
years out.
2030
Like, yeah,
is
I think
just-
that's ridiculous. But 7 years out, I mean, anything can happen. You just don't know.
Yeah.
But it's like obviously that's more of a marketing gimmick than anything else.
Mhm.
You know,
Yeah.
it's people that already have a
yeah.
predisposition to be optimistic towards Bitcoin are going to hear that and be like, "Oh my God, there's such an opportunity to invest in some of these companies." So I just consider that like that's not when you're forecasting out that far. That's not even a forecast. That's just a marketing slogan.
Everyone's
It's a
gonna forget
marketing.
about it.
That's all it is, and it's I mean, based on nothing but marketing, really.
Yeah.
So I'm gonna say Bitcoin will be higher by year end.
Oh,
so
what's your rationale?
I flipped a coin.
Okay, yeah, no, that's good. Hey, that's probably. I actually
Yeah.
think that Ryan's probably got the best.
Yeah, well
Yeah.
done. I like
Chance,
that.
right?
I like that a lot.
It's true.
Yeah.
So that'll work for me.
All right.
Good.
In the same vein as my last prediction about M&A activity, this is not really a prediction, just an add-on to that. I would say that M&A activity should be opportune in the U.S. markets. Some of the pandemic stars may face bids after recent share price collapses. Some will still need to decline further to become really attractive, but names maybe like Pinterest, Peloton may face some M&A activity, at least rumors for sure around them. I would say I'm not sure if even Zoom if it continues to decline at some point, maybe it becomes a name that people look at. But again, many need to still fall to be truly attractive. But there are going to be some sharks, some smart money start to come in to some names that actually do have cash flow and earnings to start look at those. Probably some names that you heard a lot about during the pandemic.
Mhm.
Do you have any more, Brennan?
Just about my golf game this summer.
Yeah, well, I have one about you. I mean, I'm not going to make any more girlfriend predictions about you.
Sure.
I'm sorry.
Brendan
I
had
know
the girlfriend.
you
It's a
need
win.
this. I know
Yeah.
it's true.
Yeah.
But
Hey.
I'm just going to say, I
Not
think
everything
Brennan
lasts forever, right? Like you had your
It's
experience,
true.
you moved on. Brendan moved on.
Brennan, my prediction is Brennan will end up taking his sister to the prom this year. That's my prediction.
Well,
Yeah.
what prom? High school?
Well,
or-
oh yes. Well, didn't you missed your prom due to COVID, didn't you?
Oh yes, this is technically true. That no, it was it was actually in 2012 that I had a prom, and there was actually a huge storm.
Back in the
so
day,
that's
people
why,
used to do that.
That's why I missed my prom. But I actually did. It got canceled because there was a huge storm in my hometown. Anyways, so
And your hometown is?
Prince Albert, Saskatchewan.
You usually say PA.
I know, but I mean everyone else.
We can get
needs to-
comments on if he says PA, if Brennan says PA, does anyone know what he's talking about?
I mean,
comment on
across
that.
Canada,
Somebody
they probably
comment on
wouldn't,
that.
but everyone in Saskatchewan, I
It's
think, would
true.
know. But yeah, just my last prediction, and I'm gonna try and hold myself to this because I got a golf tech lesson for Christmas for my parents, so they're gonna analyze my swing and whatnot, which is pretty nice. Thank you, Mom and Dad. But this summer, my golf game is going to improve, and I'm going to break my 2022 summer record game of 83 on the course behind my house. I mean, the real goal is to crack into the 70s, which I've only done a few times in my life. But we'll see if I can improve on that. No comment.
Nice.
All right, I got a couple
We
more.
all care about your golf game, and so do the listeners.
Well, I
so
just wanna
that
hold
was a
myself
really good one to
accountable
end on.
To the listeners.
True.
Just like when it was, I put out that I was writing the second level CFA, I failed it miserably. I
I
had
thought
to
we
tell
were never
everybody.
bringing that up again.
It is
just
what it
keeps
is.
Coming back.
Yeah, I did end up passing it though eventually, but
I'll make a final prediction on the Canucks. They will go on a stupid run right now after a abysmal start to the year, and it will make it so management believes they are actually somewhat of a good team. They will not trade the players they should at the deadline. and the Canucks will again either squeak into 8th place or just miss the playoffs, and I will shoot the owner. No, I'm just kidding.
That's good to say.
And they
on the
won't
podcast.
draft
If that
Bedard.
actually happens, let's not. No, I'm
Yeah.
kidding. But yeah, it'll just be rinse and repeat from what it's been over the past 10 years in Vancouver. We'll be trying to pull on the wrong rope that we should be pulling on. So that'll be fun. Yay.
All right,
Any
I
other
got
final
Yeah,
predictions?
I got a couple more.
Okay, good.
One on Aaron's my background funding from FTX. I'm actually going to say FBF is going to get convicted and sentenced to 20 or more years. I am going to say they are not going to give him a slap on the wrist because they've already his co-conspirators, I guess you could call them, ex-girlfriend Caroline Ellison and co-founder Gary Wang have already pleaded guilty. They haven't been sentenced, but they pleaded guilty about I think a week ago or so. And I think they're going to actually throw the book at him. I think he's going to get the full sentence. So it's 20 to life is what most people with an actual background in law. I have no idea. I'm trusting them in saying he can actually face life in prison for this one. But I'm saying he is going to get a high sentence, at least into respect what they can put on him.
Yeah.
And then I do have another prediction, but if you want to comment on this one.
Well, I was just going to say that a lot of people might be a little confused because they hear a lot of these abbreviations, FTX, SBF, and it's really, I'll admit I was confused about it. So just for clarification, FTX is the company. This is the crypto exchange. SBF is the founder, Sam Bankman-Fried. So that's the abbreviation of his name. People refer to him as SBF. The company is FTX. So just so that everybody knows there. One of the things about
and Aaron,
SBF,
what is AOC? Can you tell us what AOC is, please?
Yeah, okay.
It's
and then we'll
hard to
talk about
pronounce.
GSP and everybody who's got like these abbreviated names can just go with the or the hyphen names can go with the initials. It's really cool. Makes them sound really cool when they're not being charged with fraud. But one of the things about SBF Sam Bankman-Fried is that he went on a huge campaign when all of this started, essentially doing like endless interviews, trying to explain himself, talking about what happened. I guess to try and rebuild this credibility. I'm not really sure why. That probably wasn't a great decision from a legal perspective because there's a ton of content with him replying to like accusations and all sorts of different things that are no doubt that's going to be brought up if he says anything that incriminates himself in any way, shape, or form, even just for perjury perspective, then that's going to come up in court now that he's actually being charged. And, generally I would say that most lawyers would say if there's a good chance you're being charged with a crime, don't go out on a media tour because you can always say something that you don't intend to say. And I do know there have been some interviewers that I follow that claim, I haven't watched the interviews myself, but they claim that they, tricked him inadvertently maybe into like admitting things that he probably shouldn't have admitted. Maybe that's part of the reason why he actually ended up being charged. But anyways, that'll be interesting to see what happens. I'll be also interested to hear O'Leary's perspective and whether or not he would still back SBF if SBF is in a federal prison.
Yeah, well, it's not the first time we've seen what's his name? The farmer bro,
Martin Shkreli.
Thank you.
Yeah,
he was
most hated man in America.
Yeah,
exactly. He's out now. He's out of jail.
Yeah, he is out. He got good time, and he is out. So, and I think he got like 7 years, but served like 5 or something like that. Yeah. He's out. So there's your last big white collar case. So we'll see if it's more severe than that. But I'll go into my next prediction, which is an actual more serious prediction, I guess, as far as forecasting can go. Chinese equities are going to continue to fall, both the mainland and the ADRs, as well as any other depository receipt. So ADRs, which effectively when you're buying these Chinese companies on normally the New York Stock Exchange or NASDAQ or something like that, you're actually just getting a receipt saying, I can trade this share for this, but it's dubious to say the least for how some of these functions we saw in the fallout of the invasion of Ukraine by Russia. A lot of the Russian depository receipts that traded on the London Exchange just got delisted, even though the company had value, they didn't. So I would not be shocked if we saw something like that happening to the depository receipts, but even past that, the general underlying companies themselves are going to do worse because we're seeing now the Chinese economy probably in the weakest state it's ever been in the recent 30 or so years that it's ever been. And they're actually facing lots of times their weak numbers, to say the least. Their accountability, their accounting standards as a whole are weak there, as well as their regulations are, I'm just going to say, corrupt. They'll probably have, if you get picked up by some of the diehard CCP followers, I'm going to get harassed quite a bit, but that one will be fun.
I don't think we have many of them on the podcast.
No, you haven't seen
that. That's 90% of our listener base.
Although there was articles about how the Communist Party has secret police stations in Canada, in Vancouver. So, good
thing I'm not. We're going to Vancouver next month, aren't we? So I'll be arrested next month.
I think that's more of a threat. I think that's more of a threat to Chinese nationalists over here and people who have family back in China.
But I'll continue. I think with their underlying hidden metrics, they're really inflated for what they actually are. I think we're going to see what the Warren Buffett, when the tide comes out, we're going to see who's swimming naked. I think there's a lot of Chinese companies swimming naked right now.
Mm-hmm, mm-hmm. I'll just say, not specific. I mean, I agree, and there's a lot of reasons why I think that it's just extremely risky to invest in a company that's based in China or largely operates in China, just given the structure of how their economic system works, regulatory system. But there is a really interesting research report that came out that talked about how China almost certainly has been overstating its economic growth, and that this is a very common thing in autocratic countries. Because the government can just report whatever figures they want. And so the result of this would be, or the implication would be, that China's economy is actually much smaller than what is reported. And the growth has been much lower. So there's a lot of analytics that was provided in the research report. Maybe we could do a segment on it in early 2023. But I found it quite interesting how they were able to compare, democratic countries to autocratic countries, and they were able to, find some patterns that indicated that it's very common across autocratic countries to vastly overstate the strength of your economic indicators and the size of your economy. So I could definitely see that being the case. Now, the question is, I think that the report said that the Chinese economy could be up to 30% smaller than what they actually report. That would be a massive difference. I don't know if it's quite that much, but I could certainly see it being a non-trivial amount.
Interesting.
Yeah, it's definitely something to keep our eye on during 2023. There's going to be a great deal of things to look at during the course of this year. I think we're going to, at some point, some of the markets areas may get worse before they get better, but I believe in 2023 there will be some tremendous buying opportunities. We're seeing, when we're doing research on some of the Canadian cash-rich companies, there are companies with 40, 50% of their cash value or their value market cap in cash. And, they're profitable businesses. These are the type of companies that either eventually get recognized by the market or get acquired. And we expect to see that over the course of this year. So there are some opportunities certainly there. Any final closing comments here? No more predictions? No more thoughts?
No.
Would like to
let's
thank.
Just look forward to the new year.
Yeah.
Make it a good year.
Thank all of our listeners for listening. Sorry, did you have something?
Yeah. Got one quick one. Okay. Brendan is going to be over 50% correct. That's my take on him. He's going to do a lot better this year.
Thanks,
I believe in Saskatchewan. There we go.
Thanks, Brett. Negative 100% correct, or between negative 100 and 100, somewhere in that range.
Yes, amazing.
I guess
That's quite the range.
Yeah.
Yep.
Thank all of our listeners for listening all year. We'll have new management interviews coming in the new year. We got good feedback on the last one. And we'd like to keep your questions and comments coming in for our Your Stock, Our Takes. We'll take a look at any stock in North America. Keep your questions coming in. We'll have some debates coming up in the new year. So if you want us to debate a stock or two stocks in the similar industries against each other, let us know. Keep rating and reviewing us on iTunes. Smash that subscribe button on YouTube. And as always, I'm going to wish you profitable investing, and this time a happy new year and a profitable 2023 to all.
Great. Thank you, everyone. Happy New Year.
Thanks, everyone. Happy holidays. Happy New Year.
Thanks, everyone, and Happy New Year.